In today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. And before I get to the technical analysis portion, I'm going to go over the economic calendar. And I do post these videos daily, so I highly encourage you to double check the latest videos so that way you get the most up-to-date information. And for Monday, August 5th, 2024, at 9:45 a.m., we have S&P final U.S. services PMI. And at 10 a.m., we have ISM services. Now, in terms of the analysis portion, pretty rough day for the most part. Big drops, over 1%, close to 2% for S&P and Dow Jones, and then over 2% for the Nasdaq. Got close to 3% at one point. Volatility index actually jumped up 25% today, which was pretty massive. And the question is, are we going to go lower? Now, for the most part, indications are still showing to the downside, but they're slightly for the short term based off MAC lines that indicate if it's bearish or bullish movement. Just to visually show right about here, you can see right now it crossed over into bullish territory. So technically the movement's in the bullish territory, and I'm expecting some kind of dead cat bounce kind of thing because we're somewhat at the right levels. For example, this is the SPY, which is an ETF for the S&P 500. And it's relatively at a decent level. For example, we've bounced twice at relatively this zone before. We've had resistance, so it's somewhat of a resistance / support level horizontally. And plus MAC lines pointing to the upside. Now, overall, for example, I'm going to show the 1 year right now. The 1 year MAC line is showing further downside / it has been reinforced technically. It was a light shade of red, and then now it's a darker shade of red, indicating potentially further downside. Volume has increased in terms of sales versus before, so it got even stronger, obviously with the darker shade of red too, reinforcing that. Plus, at the same time, the reason why I'm expecting dead cat bounce, not only horizontally in terms of potential support, again, this is SPY ETF for S&P 500. It's just a different ratio, basically, that's all it is. And the reason why is because we basically touched one of the moving averages for the 1 year chart and potentially could bounce up to the upside. Again, if we do bounce up to the upside, because it's not a guarantee with these MAC lines if they will hold true, the market could always be dictated by, for example, news that happens randomly out of nowhere, or mega cap stocks decide to have some positive or negative news and they tend to move the market altogether. So there is that. But even if we do jump up to the upside, MAC lines are strongly showing further downside. Even though the shorter term MAC lines are showing somewhat of an upside, right? So we're at the right levels to bounce up to the upside. Shorter term MAC lines are showing upside, like we showed earlier. Here's the 3-month chart, MAC line showing upside. So it seems like we might have a bounce, potentially, right? Now, if we do bounce up, what levels are we looking at for the most part? I'm pretty much, in my opinion, I'm looking at pretty much this zone right about here, where we hit this level where we're at right now and then jumped up to this zone. So you're looking at roughly about $535, almost $536. So I would say $536 give or take. And mind you, we closed at $532.90. And then the next level potentially could be within this zone right about here. So let me draw it out a little bit. So this zone, it's not really perfect, but I think it kind of makes sense to potentially think of the zone before. So we saw a little bit of spike up right there, a couple of support jumps, not obviously clean. I didn't draw this line perfectly anyway. Support jump, and then somewhat of a resistance / jump up to the upside. So you're looking at roughly almost about 538, 539, give or take, maybe 537. So somewhere between 537 to 539. And I think that potentially could be the highest, because I don't believe the jump is going to be massive, because ultimately the MAC lines for the longer term are still more showing to the downside, right? But again, we might maybe even have a false breakout, not false breakout, but a quick spike up to the 540 and then start coming down. So that's what essentially could happen, most likely based off of the MAC lines. Now, if we do come to the downside, which I think ultimately we are going to come down to downside, and this is the zone I think we're going to come down to. Now, this is not going to be just one trading day, but I'm just saying, in my opinion, this is the zone what I'm looking at to come down to for the most part. And that's roughly about, when I checked earlier, it's showing $517.90. But when I checked earlier, it was about $518 and some change. But essentially $517, $518, and ultimately coming down to this level, give or take. Obviously, it's not going to be in one day. For example, it could be the first, we'll see 524 first, right? And 524 is a pretty decent level because we had resistance / support come across right about here. So about like somewhat of a touch point and resistance. So 524 could be the first one, but ultimately coming down to the 518, 517 level over time. That could be in a matter of 2 trading days after the Monday, But ultimately the Monday could be a dead cat bounce. So to visually show what I'm talking about, basically go up. Let's just say we get to the 538 and then come back down, potentially hover around this zone, because we could hover around the zone. We did it a couple times here and there with a few trading days, and come back down to 530 and then 529 and all that stuff, and then basically go up a little bit and then come back down, and then 524 within the next few trading days, and then come down to the 517, 518, because more of the longer term is showing downside, right? Now, again, this could all be changed by the news, and then MACD lines could be flipped completely, and this play doesn't work out, right? So there's that. Now for QQQ, which is an ETF for Nasdaq, it's showing the same thing essentially for the short term. So it's gonna, in my opinion, show a dead cat bounce as well, and then ultimately come down to this lower level that I mentioned before in terms of zone. So the zone is basically almost 448. Mind you, closed at $448.75. So about $448 down to $433 and some change. Basically staying within the zone. We saw support levels right about here, resistance levels right about here, give or take. And given that we're pretty much on the level right now, in terms of dead cat bounce, basically going to the mid area of this section right about here, somewhere about basically $455, $456, but more, 455, 456, and then potentially getting to this zone right about here, because it's going to collide with the moving averages. Let me zoom in a little bit closer. So basically horizontal resistance right about here. We saw resistance and support within this zone. Plus at the same time, we're hitting moving averages and downward trend resistance line that we did break through it, but there were touch points where it didn't break through. And you're looking at pretty much $460 and some change, give or take. I don't think it will go higher in my opinion, but that's just my opinion. If it does go higher, we could hit the 465 and some change. We saw pretty good resistance right about here and a couple of spike ups, but yeah, with some false breakouts too. Plus probably the moving average will come down to that area, about 465 and some change. Now to the downside again, like I stated, anywhere between $448 all the way down to $433, give or take, and some change, because predominantly, even though short term is showing upside, so dead cat bounce basically, more of the longer term is showing downside. So probably by the end of the trading week or leading up to next trading week, because next trading week we do have CPI and PPI numbers coming out, which are inflation numbers. I don't know how important those will be, because the market seems to be optimistic for a September rate cut, regardless of what the inflation number is, and they just keep improving somehow. So there's that. So basically, it could be a pretty volatile week next week, or it could be pretty much almost stationary / nothing. And what could happen essentially, it could just be constantly floating around this zone right about here for the most part, but I don't expect that to happen. I think because we've seen massive volatility and plus volatility increase quite substantially, I think it's going to be a rough week, maybe week and a half, 2 weeks of trading volume, but we'll see. Now in terms of Dow Jones is almost showing the same thing, give or take, but it's essentially showing it a little bit more stable somewhat. Let me see it. No, actually it's not. Sorry about that. So for the Dow Jones, essentially what's happening is it looks like it's coming down to this level ultimately. That could be in the next few trading days. Mind you, we closed at 39,737 points, and we dropped faster than I assumed. I assumed that at least we would probably be held by this moving average, but nope, dropped down even further. And if you're wondering what's the level right about here, so this is an upward trend support level dating back since April of 2024, give or take. And this level is, depending on when we hit it, because the longer we take, the higher the low will be. And you're looking about 38,500 points, give or take. And then if you're wondering what this line is, this is a support level dating back since 2021. So let me show right about here. So this is an upward trend resistance line dating back since 2021, and this upward trend support level dating back since 2021. Now, it was more support levels back in 2021, but as of recent, there wasn't really good touch points. But if you're wondering if we do get down to that support level, you're looking at support at potentially about 37,829 points, give or take. But either way, we do have support when I checked earlier about the 39,000 points level. So 39,000 points, and then the next level is basically about 38,500 points, give or take. Now, if we had the dead cat bounce, just like the S&P and Nasdaq, we're going to have resistance at pretty much 39,900 and some points, but essentially 40,000 points clean. And then the next level is with this upward trend resistance line, which coincides with the moving averages about 39 or about 40,368 points, or 370 points, you could say, because the lines are not perfect. And then plus the top end of the moving averages, where it kind of coincides with resistance and support right about here horizontally, if you see. Basically looking at roughly about a level of 40,500, and it's showing 40,561 points, but my lines are obviously not perfect, so I would say just 550. So 40,550 points, give or take, probably plus or minus a few points, and that would probably be on the top end. So just to visually show what I'm talking about, basically it's going to go up, probably have some issues with moving average, go up again, have some issues with the horizontal resistance level dating back to 2021, a little bit issues with the moving average, and then go up here, and then the next few trading days start coming back down, bouncing off probably moving average a little bit, and then heading down essentially to this level. Again, this could be changed by the news or whatever might happen, or mega cap stocks move into the opposite direction of the market, carrying the market to the direction that they're going, if that makes sense. But that's basically it for today's video. If you found it beneficial, consider dropping a like. It does help out the channel, so thank you so much for that. I do appreciate it. And if you want to be notified when I upload my next videos, consider following/subscribing so you'll be notified when I upload the next ones. And that's basically it. Thanks again for watching. I appreciate it, and see you guys in the next one. Take care. God bless. Peace.